Welcome back, everyone, to the Risk Intel podcast, powered by SRA Watchtower, where we share risk intelligence with experts from across the banking industry. I'm your host, Ed Vincent, CEO at SRA Watchtower. Welcome to the Risk Intel podcast. I am excited to have with me back on the program this week, Shawn Ryan, the Chief Financial Officer at SRA Watchtower, and Niki White, the Chief Growth Officer at SRA Watchtower. Shawn and Niki, thanks for being with us today.
Welcome.
Thanks, Ed.
We have a bit of a tough topic this week, but also one that we thought was really important to highlight and talk to our constituents about on the heels of the natural disasters that have occurred and ravaged the southeastern United States. Many of us have had friends, families, colleagues impacted by hurricanes Helene and Milton. And so first and foremost this week, we wanted to call attention to that and encourage everyone to go to the redcross.org website and do whatever you can and whatever we all can to support those impacted by this tragedy. As I said, this is something that is near and dear to our heart at SRA Watchtower. We are actively participating in the American Red Cross's relief efforts. Related to that, we're going to try and pull in an ERM angle here as well, because part of this is the short term, what can we do to help folks in need? The second is, well, what about ERM programs and what about risk programs and what is the impact on financial institutions? What do we learn from these natural disasters and crisis situations? And so, Niki and Shawn, we're going to dig into that a little bit here today and talk about some of the observations that we think people should be considering within their ERM programs on the heels of events like this. So, Niki, let's start with you. Let's start with an opening question. Right, we've seen many crisis situations over the last few years, whether it starts with runs on deposits in a bank, in the case of Silicon Valley and related institutions, whether it was COVID-19, where the world shut down, and now we've got a hurricane situation. So, in all these crisis situations, where does the ERM program? Where do people look first? Maybe that's the obvious answer, but then the following question is, where should people look second?
So people always look to be the helpers. They're trying to help their customers, to help their members, to get out there and to be that source of support for their communities. People need funds. People need access to potentially cash because maybe there's no power in order to pay with cards. And so when you have fragile payment systems that are impacted by technology, what are the backup systems that are in place? A lot of the banks now have generators and have redundancy with other places, but what happens when everything's underwater, or when there isn't access to the power or the internet technology? You need to have access to cash sometimes. So do you have the systems in place, and do your customers have access to the funds that they may need? But then secondarily, when we think about that second part of your question, do you as an institution have the funds available for them? Liquidity, as you mentioned, is something that really came to play. And when we think about layering on the impacts of what did we learn during COVID from a departmental perspective, if you had an entire department that got sick, can you execute transactions? Do you have the ability to maintain proper controls, but even to execute on them, even if you can't have a perfect system of internal controls? Sometimes you need a secondary signature on things. And what if you have 3 backups for your secondary signature and you can't get to any of them, whether they all got sick at the same time or whether they're all geographically concentrated and they're all without power or without internet? And if they can't get access to the codes or the fobs that they need to push the buttons, if you will. So I was talking to some clients at a conference recently, and some prospects at a conference, and they were talking about how some of their systems were still manual. Some of their requirements were still paper-based. So when you think about where you are from an overall enterprise risk management perspective and how much technology plays into that, either in your favor or potentially to your detriment, layering on the learnings that you had from different kinds of crises, whether it's concentrations of people, concentrations of technology, concentrations of geography. What are you going to do to serve your community?
Yeah, Ed, if I might, what I heard it made me think of is scenario planning, right? We produce a enterprise risk assessment under kind of the current scenario or the base scenario. But what Niki is pointing out is that you ought to also look for the opportunity to stress your risk assessment of certain components of, certain attributes or certain categories of risk to see how that risk assessment holds up under a more crisis-like scenario. The one that I was thinking of related to the signatories that Niki was talking about is succession planning, right? What if you say, yes, we have a succession plan. Yes, it's for the entire leadership team. And yes, it identifies who is the second in command. Okay, well, what if 1 and 2 isn't there? Now what happens? Have you thought that through? Would you know what to do next? Would you know how to start the process of saying, okay, how do we go to line 3 and 4 at that point? Which is very similar to what Niki said.
Well, and when you think about, item number 2, person number 3, person number 4, you're getting pretty deep. And, when you have such a broad diversity, especially in the community banking space, you don't always have a bench person number 3 and a bench person number 4. And so you start getting to whether you have some limitations on physical access, but do those people know how to do what they need to do in order to step up into that space?
Well, Shawn, we ran through a scenario, a business continuity scenario recently, right? That you ran, and one of the observations I think we had was, well, we have a lot of people in a geographical area, right? And to your point, right? If you have options 1, 2, 3, 4 that all happen to be in a single geographical area, right? Now you're down to option 5. And Niki, do you have an option 5, right? Have you thought that deep? So I think that, right, part of this I think goes back to maybe step 1 here is risk identification and assessment, right? Shawn, you talked about stressing those scenarios, but kind of part 1 is relooking at your risks, identifying them, and then really assessing to say, right, do we have geographical concentration, as you said, Niki? And do we have situations where we have exposure to physical disasters in particular? I think then the follow-on from identifying the risks is potentially updating your key risk indicators. So are there natural disaster specific KRIs that should be identified and put into your ERM program and tracked? And then you get to the scenario.
You might need to add some stuff. Yeah.
Yeah. Right. Right. It may, you may have, this is a starting point, but now if you look back at it and say, what I think to the lessons learned comment from before, what do you learn from these? Are there some additional KRIs that you should be tracking?
And how are your KRIs impacted by the control structure that you have in place? So, if you have a control structure that is highly dependent on a tight geography or a tight population of individuals, does your control structure fall apart? And how does that roll up and impact those KRIs that you're working on measuring at the ERM level?
I just want to interject. I think, one way to mitigate that, and I think Niki was, she talked about it in a physical sense, like generators or that kind of thing. But I think the other, I mean, we saw it frankly in the disaster. I saw it personally in the disaster that we just experienced in Western North Carolina. I have a daughter in university, and when the university was unable to hold classes, what did they start to do? They asked other universities if they could step in and help them with the, returning to the classroom. I think a bank might find itself in a similar situation if it's access to funds or payment networks or those kinds of things. Do you establish relationships with maybe neighboring institutions or institutions outside your geographic region that might be able to support you from an operational perspective in the midst of a disaster? It strikes me that that's not something you think about when you think about your risk assessment, but it is something that you might frankly need to think about when you think about what happens if our institution doesn't have the people or the physical infrastructure to operate. How would we operate the bank, which, given that we're managing money, doesn't technically have to exist in any physical location. It can exist wherever it's able to operate on that day. And that might be by borrowing your neighboring institutions, whatever, drive-through, whatever that might be.
Or setting up in a hotel.
Or setting up thank you, exactly. I actually have experienced that before. That does happen sometimes in a crisis situation or a disaster situation for banks.
Well, all those things I think come out of from that the scenario planning you talked about earlier. stressing those scenarios and having to come up with those contingency plans and ensuring that there are continuity plans in place. One of the inputs into those plans is engaging with, your local authorities and partners. Those partners, right, to your point there, Shawn, right, those partners may be actually your competitors right down the street, but in this moment, right, you are right in the community there, right, in Western North Carolina there. All of a sudden, you're not competitors, you're partners. You're solving a problem together. And so, times of crisis maybe make strange bedfellows, but you have a situation there where you're leaning into a maybe a non-traditional partner.
I think that's
Niki,
right.
you talked about, right, that concept there of leveraging technology as well. Right. I think that's kind of another point that we have on our kind of laundry list here of leveraging technology and external expertise. So maybe the external expertise are some of those partners, or the external expertise may be the hotel. Maybe the expertise might simply be a physical plant where you can all convene, and the technology may be getting your system stood up in another facility so that you can do this stuff remotely rather than physically in the same place. Talk a little bit. Would you maybe here in closing around expectations for boards and executives and how they should be thinking about natural disaster scenarios?
I think they should understand their risks. This comes down to the governance aspect of understanding management's plan, understanding management's sufficiency of identifying what the risks are, and creating multiple plans to mitigate them and to work around them. But then offering that sense of support. Board members, especially at the community banking space, and all the way up to the larger institutions, are pillars of the community. They're people who have access to resources. They're people who are highly networked, and they're store owners, they're commercial business people. And think about what that does to the operations of the bank overall. You can expand your network outside of the bank by incorporating the feedback from your board members and from your business owners. But the board's ultimate responsibility is to have proper governance and to make sure that all of the options are considered.
Yeah, I would say, I'm sorry, Ed. I would just say, make sure you run a business continuity and disaster recovery exercise, and make sure that the board has an opportunity to either influence the scenarios at the outset or influence the scenarios post exercise for the future. And the board should expect that those are, to Niki's point, part of the risk plan. But more importantly, they should ensure that it's done right. That we learned a lot when we did one for our company. We'll make changes as a result of it, and so just carrying out that exercise, I think, is of great value.
It's a great point, Shawn. We had our audit and risk committee meeting last week, and I presented the findings there to that committee. Right, they wanted to see the results of that tabletop exercise. So I think I'd summarize that last topic there. That it's important for, as you said, Niki, the board to understand the risk. So to a certain extent, that's incorporating natural disaster risk into strategy. Right, that's the role of the board. And then, Shawn, to your point, there's a risk reporting element here as well that really is about driving awareness, and then once you have that awareness and you have risk strategy as two sides of the same coin, there you have the ability, as you said, Niki, to tap into that network in the community when you have a time of crisis. Well, thank you very much, guys. We've covered quite a bit of ground here. I appreciate it. I'm going to take a shot at recapping it, and then I'm going to come back to our opening point. So important things for risk departments to think about: risk identification and assessment, right? Understanding what those risks are. Geographic concentration is a great example of that. Updating then your key risk indicators, number 2, right? Are there some natural disaster specific KRIs that need to be perhaps incorporated into your ERM scheme? Number 3, Shawn, you hit on this early and often: scenario planning, stressing those scenarios as well. And then from that, learning and strengthening your business continuity and disaster recovery plans, making sure that those plans include engaging with local authorities and potentially partners who maybe are non-traditional partners, right? The hotel, right? The competitor down the street, and leveraging technology and external expertise in those plans. And then finally, bringing it home with making sure that your board is well informed, right? They understand the risk, and you're reporting up to them with all the scenario planning as well. So I think that there's a prescription there that hopefully will help some of our friends here in taking a look at their ERM programs. And the last thing I'll close with is re-asking again everyone to please consider going to the AmericanRedCross.org site and doing our part to support the victims who have suffered over these last few weeks. It's going to be a long road back, and certainly everything we can do to help is going to make a big difference in their lives. Thanks again, everyone. Thanks, Niki and Shawn. Appreciate the time.
Thank you.